everyone, it's Julie Moon. I'm Senior Research Analyst with Finovate, and we are here at Finovate Europe 2026 here in London. Today I'm joined by Phoebe Kitchen. She's Principal at Molten Ventures. Phoebe, thank you so much for joining me today.
Yeah, great to be here.
Yeah, so to kick us off, Molten Ventures, it focuses on European technology companies over the long term. What advantages do you think that European fintechs have today that are often overlooked when compared to their US competitors?
Yeah, I mean to start, I think Europe has many structural advantages. So I think one, we're like a large, diverse economy and ecosystem. We have over 500 million people, obviously massive centers of global political and economic influence. And I think what's particularly true about Europe is really the sort of skill depth of technical talent that we have. So that's both in terms of fintech and also many other sectors. So I think we have more software engineers, for instance, in Europe than we actually do in the US.
Oh, wow.
So I think all of those environments obviously make for a great ecosystem. And I think for fintech in particular, obviously we're in London now, is really home to some of the capital and some of the main areas of like economic and financial influence in the world. And I think that's been proven by some of the success stories that have been born out of here, both in the UK and also obviously elsewhere in Europe. So for instance, one of our portfolio companies is Revolut. They're now the most valuable company in Europe, is essentially a UK fintech company. There are many other success stories that I could name as well. So I think it's both structural and also the sort of fintech heritage is pretty entrenched throughout our ecosystem. That's true as well from like a regulatory perspective with both EU regulations, GDPR, etc., but also in the UK through like the FCA.
Oh, very cool. So many fintechs, they can achieve that early traction, but far fewer are able to successfully scale across markets. Where do you see companies struggle most in their journey to scale?
Yeah, I think it's a great question. It's one that we think about a lot. So my role is really Series A and B investing. So the B stage, as you said, is exactly the time you have great product market fit in your home country, your core product, but you need to be able to expand into new countries or like new products. And I think there are like often like a multitude of factors there. I think you see this in particular with the US as a good example. That I think one is like the cultural reasons why people need products, particularly from like a consumer perspective, can be different. So what really are you solving for? I think just because a fintech works well in Germany doesn't necessarily mean it'll work well in the UK based on people's preferences, cultural backgrounds, etc. I think the same is true sort of structurally. So for instance, I'm now looking a lot at the wealth management space. And you have wealth advisors, but the tax incentives are very different for IFAs in the UK versus RIAs in the US.
Oh, yes.
And how your company, just because it serves one of them, doesn't necessarily mean it can serve all of them. And then obviously the last is like regulatory. So I think Europe obviously is many member states, you can passport a lot of your licenses, but for a lot of companies, it comes with this additional regulatory framework. So you have to be able to think about that quite proactively. So I think it's that those mix of all of those things. And I think what we look at for founders at that stage is their ability to be really intentional with that growth process, essentially. And it's often, I feel, it can be a bit of a catch-22 because when you're raising a round, just say to expand, you're a UK company, you want to expand into Germany, you often need to show a little bit of traction there before investors will really give you that upside in credit that you can do that at scale.
Yes, it's that chicken and egg type of problem for sure, difficult. All right, so in 2026, capital in fintech is a lot more selective, as we all know. How should founders think about capital strategy, not just in the sense of raising that next round, but also in sequencing that growth and their partnerships and potential paths to liquidity?
Yeah, and I think it depends a lot on what stage you're at. So if you're a seed company versus Series A, Series B, I think maybe I can focus on the latter two. That's where we invest.
Yeah.
So I think for Series A, a lot of it now is around obviously product market fit. And where we'd look for from an investor perspective is, do you have really strong evangelism from your key customers? Are your customers very innovative? Are they people who pull forward technology adoption? Or are they sort of laggards in the industry? So working around those references and also their ability to build into bigger contracts, even if you only have a few customers, which is often true if you're, for instance, an infrastructure software company.
Yes.
So I think that sort of customer love is really critical. Obviously, founding team is important for all of these stages. And then at the B stage, it's really around, you've proven you can build great products, but you have to prove that this can be a repeatable product and importantly, a big business. So that's really about, have you scaled your go-to-market team? Have you transitioned from being founder-led to really like a productized sales team, particularly if you're selling into big enterprises or financial services.
Yeah.
And that comes with a lot of the organizational infrastructure behind that. So I think it's not just about metrics when investors are sort of looking at, between 1 and 3 million, that's a Series A, 7 to 10 million is Series B. It's really how you're positioned as a company to be able to achieve that next phase of growth, which a lot of investors have to underwrite to get to their returns.
So we have time for one last question here. Europe is known for having quite a complex regulatory environment. How should fintechs be thinking about regulation when it comes to scaling?
Yeah, and I think it's definitely a great question, the sort of constraint versus moat debate that you have with a lot of regulatory infrastructure, particularly in Europe. I think for us, it's how you think about being intentional with that. So you want to start, obviously, from a regulatory first perspective, if it's in the UK or if it's in the EU, and engaging pretty early on in with the regulator and what type of license that would suit your business best. If it's an EMI, are you going towards a full banking license at some point? And then being really intentional about how your growth levers will interact with that, both in terms of new products, how you're going to expand into new markets. And I think it's that sort of sequencing that's pretty important, and sort of active early engagement and thinking about that early on in your product roadmap.
Huh. Yeah, that's such an interesting point, that they really have to think about, which regulatory constraints apply to them individually. Yeah, that's great. Well, Phoebe, thank you so much for taking the time to talk with us today. I learned a lot, and yeah, this was wonderful.
Yeah, great. Thank you for having me.
Yes, and thank you as well.